I've got an interesting one for you today. Let's say you've built an algorithm with an AI that does trading, whether it be in crypto or typically on a stock exchange. Let's say the AI that you use is able to scrape data and somehow might have access to something that's not published or non-public data. Essentially what we would call insider trading. Insider trading is the SEC Rule 10 B. It's very important to make sure that any evidence or any information that's not public or that was garnered through sort of illicit means, or hey, your buddy has the stock tip and he happens to work at the company, knows that the earnings call is coming out the next day and that it's going to be really good or really bad. What if your AI gets that information? Your AI algorithm goes and then trades on that information automatically, as it always does. And then a millisecond later, you've committed insider trading. So is it your responsibility? And the answer is yes. So you're the one that is in charge of the AI. You're the one that has either created the algorithm or overseen the creation of the algorithm, and you're the one who manages that AI on a day-to-day basis. It's your job to ensure that all of the trades it does are legal and that they follow the rules of the SEC and FinCEN and all the other agencies that may have oversight into it. So make sure that if your AI is scraping information, that it doesn't have access to anything that is not published or that may be, something that somebody has put in there that you're not supposed to have access to. Now, what is legal? So let's say an AI is listening on the Bloomberg, that has a really nice little app that you can get into, and it has, second by second information. As soon as that AI reads that information, extrapolates what the answer is, and then trades on it, well, that's okay because it became public knowledge at that point. So what you have to worry about is anything that you don't have access to, again, any of that non-public information. You want to make sure that you're in charge of that. If perhaps you've seen that your AI has done that, the best thing to do is end the trade immediately and make sure that it doesn't happen again, fix the algorithm so that there is no issue in the future. Does that mean you're exonerated from it? No, but the SEC may be looking into it. Now, there are a lot of things they look into as far as the millisecond trades and how quickly AIs can react because, as you know, AIs can react in a split second way faster than any human can. And those algorithms are based purely on what the numbers are and without emotion, which is completely opposite to a human trader. Good human traders have to fight through the emotion constantly, and it's usually one of the largest, toughest battles if you're trying to say, oh, well, it's going down, I need to sell, and then that's when you hold. It's all this complicated stuff when it comes to emotions when you're a trader. But remember, just because you're not the one physically trading, you are overseeing that AI and you're in charge of it. So you're responsible for anything that it does, including insider trading. So if you have questions about how to build an AI bot, or if you have questions about SEC compliance here at Quantum Counsel, we'd be happy to help you with that. Give us a call. Thanks.